I started trading crypto in 2023, and by 2025 I reached financial freedom. Now I'm on a mission to prove that financial freedom isn't a fantasy, it's a strategy. Forget the average stuff you see on YouTube. I'm bringing real next level analysis again. What's good, y'all? It's your guy JC. So the market is moving pretty fast after my last video, and there's some important follow-up I need to share, so I'm back with another update. Okay, let's do a quick recap of my last video first. So back then, I said my view was still bullish, and the price was hovering around 113K when I uploaded. Yeah, and I said a lot of long positions got flushed when price hit local bottom at 111.8K, and the market would go back to punish the shorts now. And I also mentioned that even if we do get a pullback, it most likely won't land on the expected zone. It will either undershoot or overshoot it. And this time I was leaning towards a not quite dip. So an undershoot, meaning price would bounce without breaking below 110.4K. And that's actually what seems to be happening. Price climbed all the way to 115.7K and now hovering around 114. If you're one of my subscribers, or if you've been following my analysis, I'm assuming you're still holding a long position. I am too, with the average entry of 113.1K. So now the big question is, what should we do? Should we close here before it drops further? And let me tell you this straight, I'm not closing yet. I'll walk you through exactly why. So make sure you pay attention, because towards the end I'll also share my exit plan. And let's start with the first reason I'm still holding, and this ties directly back to my last video. Is that the short traders haven't been liquidated yet. Now ask yourself, where do you think all the stop losses are sitting for the shorts who jumped around here? It seems pretty obvious to me. Right here, near the top of that big red candle. Because if price pushes back up to that area, that red candle's momentum breaks down, and from the short side, this becomes a logical stop. Yeah, it's a tight stop for them, sure. But for high leverage retail traders, this is probably the most reasonable stop loss level. So yeah, I believe price is coming to blow that up. And if you check Binance liquidation heat maps, you'll see the highest cluster of leverage positions is around 116K. Now then, where's the next big stop loss cluster for shorts? Most likely around the next major resistance at 119. Because if price breaks that 119K level, there's potential to squeeze all the way to the previous high. So anyone shorting here would want to protect themselves here. So it's a natural place to put a stop. And will it break now? Not sure, but that zone will eventually go. So 116 and 119 are major pain zones for shorts. So the question is, where do I plan to take profit? Actually, look, there's no such thing as a perfect exit. Okay, let's be real. Thinking you can sell at the exact top every time, that's just arrogance. I mean, even the top traders I know, people who live and breathe trading 24/7, we can't nail the top every time. Taking profit is about knowing your size and knowing when to walk away with your share. As for me, I'm planning to scale out between 116 and 119. Why? Because you already know what those levels mean. And if you also remember what I said in my last video, after a fake out below the downward channel, price comes back inside the channel and retested the bottom. Now it's consolidating inside the channel again. And if that holds, we've got a good shot at pushing towards the top of the channel. And if it does, that upper boundary would be around 118. So that's why my plan is to take profit gradually as we approach 116 to 119K zone. But now, what if price doesn't push higher and starts to drop again? My stop loss level is still the same, 110.4. No change there. And if we do hit my TP levels, then rally even further? So what? I won't regret it. I stuck to my plan, and that's a win for me. If it keeps climbing, I'll just reanalyze and see where the next opportunity is. Maybe even from the short side next time, we'll have to see. Also, let me share one thing I don't talk about much. It's the mindset. Yeah, if I had to name the two biggest reasons why I was able to succeed in trading, it's one, don't let emotions make you break your rules. And two, don't dwell on what's already happened. Even if it wasn't an ideal call, move on and focus on doing better next time. And these two rules, every successful trader I know lives by them. So I hope all of you watching this pick up that mindset as well. Oh, and here's another golden tip. When you win a trade, make sure you withdraw. Stack cash if you need, or stack spot Bitcoin. Yeah, I'm saying this because I don't want you to blindly increase your position size just because your account's grown. That's how people give it all back. And by the way, if you're interested in hearing more about how I manage my portfolio or mindset stuff like this, let me know in the comments. I might make a separate video on that sometime. And in the meantime, don't forget to hit subscribe, like, and turn on the notifications. I promise you, if you're serious about trading, you will not regret it. So to wrap up today's video, the shorts haven't been liquidated yet. So market makers will likely push higher to squeeze them and grab liquidity. And two, I'm still holding my long from 113K and planning to take profit between 116 to 119. My stop loss remains the same at 110.4. And three, if you followed your rules, it was a good trade. Don't let emotions make you break your rules, and don't dwell on what's already happened. And yeah, that's all for today. I'll catch you in the next one.